Well, the adventure continues here on a Thursday morning. I'm Marlon Bowling with you. Thank you so much for joining us. In case you missed it this morning, we did have some weekly export sales data that came out from USDA. Maybe a bit of a surprise to some, but maybe not. We had corn at a healthy 1.42 million tons sold last week. Soybeans, 1.08 million tons. Soy meal, 326,300 tons. And the wheat at 1.51 million tons. We wondered how big it would be, and it's that big. All right, the biggest of all of them, the wheat this week. They don't get to claim that very often, so anyway, kudos to them. But we also had an overnight flash sale announced, and it was 400,000 tons of soybeans that went to unknown destinations, so that will show up maybe next week. So let's take a look at how the trade is reacting to all this. Early on, everything was higher in the overnight trade. Now things have kind of cooled down. March corn only a half-cent higher at $4.80, only a half-cent from our low of the day right now. The May contract is actually unchanged, and for that matter, so is July. Now in soybeans, we have January 5.5 higher, but you have March 4 3/4 higher. We're at $13.31 per bushel. That'd be 6 cents off of its overnight high. So even with that big sale of soybeans overnight, it's not overly exciting here on the futures trade today. Now in the wheat. In Chicago, March is firming up by 4 3/4 cents. We're at $6.10 per bushel right now. And that's still hovering about 9.5 cents below our high that was made last night. Kansas City wheat, well, it's still struggling. We have March down 3/4 at 631 1/4. Again, I'll remind you, in case you just tuned in, the December contracts on the grains and I believe on the lean hogs all go off the board today. Now let's take a look at Minneapolis wheat. March is now 3 1/4 higher. We're at 716 3/4, much closer to the low of the day. We're only about 2.5 cents away from that, but we're about 8 cents away from our high last night. Cotton was firmer this morning, and right now March is up 38 points at 81.56. Ted Seifried joins us now. He's with Zaner Ag Hedge in Chicago. Well, we have some sizable moves going on in the grain trade. We also have very sizable moves going on in outside markets today, Ted. Goodness, look at that gold market today. Let's see what it's doing right now on the big board. Last time I checked, we were about 50 higher. Let's bring that up if we can. We are now 56.90 higher at 20.45 even per ounce. All I can say is, wow, look at that. And a big move in silver today, too. When I checked a little bit ago, it was about $1.50 higher. It's still up 146 on December futures at 24.10 per ounce. That stuff's getting kind of valuable all of a sudden here, Ted.
Yeah, and Marlon, I try not to trade metals too often because I'm a bit of a gold bug myself and I've got a bias. But either way, wow, that's a lot of strength in gold. But look at the dollar, Marlon. Dollar down 740 points roughly at the moment. That's a big move. And that's following through on the big move lower that we saw yesterday. You got crude up $2.40 as well. So what we have here is a very large risk on day. The reason for that is because of the wording the Fed used in their decision, which was possible 3 to 4 rate cuts for 2024. So although they didn't lower the rate, on this December meeting, the outlook is for lower rates in the future. Now, here's the thing about that. I feel like the Fed has realized that they can maybe sometimes do more with their words than they do with their actions. I wonder if we will get those rate cuts, Marlon. I really, really do. But for the time being, hey, it served their purpose. It pushed the dollar down like they wanted. It really, really put a lot of steam into the stock market, trading at really all-time highs. It continues to streak higher into the end of the calendar year. Wow, that's been impressive. And then you've got money coming into, like you said, gold and crude oils. The disappointing thing here today is look at the grain. They're really kind of anemic with all of this. And with decent export sales. Now, I'm going to say soybeans were at the low end of the range, but you throw that 400,000 metric tons to unknown on top of that on the daily flash sale. Hey, okay, we're all right. Corn was good. Wheat is the best number that we've seen since 2007. Yet we can't really get anything going in the grains. And so that is a bit of a disappointment, especially considering everything else that we've got going on here today.
Yeah, that is a concern. And One has to wonder, I mean, seriously, if the Fed would have made comments like that if it wasn't an election year coming up and they weren't trying to talk up the market a little bit. I mean, that tends to happen a lot, and you just kind of have to wonder. Let's pause right here, Ted, and we'll come back and we'll take a look at our livestock trade on a Thursday right after this. All right, here it comes, live cattle. Let's take a look at what the prices are right now with our quotes from bar chart. And on the live cattle board, we are just barely higher. February up 15, now 17 cents higher at 167.40. Not a real big move, and it's only a dime from our low of the day here. As we switch over to the feeder cattle market this morning, we have March now trading $1.82 higher at 219.67. Let me stop right here. Go back to Ted Seifried. Ted, why are the feeders leaving the live cattle in the dust here today?
You know, there's a fair amount of technicals going on with both live cattle and feeder cattle, but let's say let the feeders be the leaders. You know, I'm not huge on cliches. That's one I kind of like, but let's let the feeders be the leaders. You've got feeders returning to the scene of the crime. The last 3 days, we've tested the 20-day moving average. Yesterday, we pulled back from it, but now we're sniffing it out once again. You keep knocking on a door, Marlon, I think eventually you're going to get through. I think there's upside potential here. I think we overshot the mark to the downside in the feeders. So I like the activity that we have right now. In the meantime, live cattle also running into their key downtrend, overall downtrend. I think they're just waiting to see if the feeders can break out. So, we talked about risk on. You are seeing it in the feeders. That's good news. I'm really hoping that we have some pretty big positive numbers in the cattle complex by the end of the day. By the way, that feeder contract has not closed over that 20-day moving average. I know it sounds fairly insignificant, but we haven't closed over that 20-day moving average since September 25th.
All right. Let's take a look at lean hogs and see what they're doing. The nearby contract, I believe, goes off the board today. What are they doing on the big board? Look at February, $3.52 higher. What? At 70.25. What happened?
Yeah, rock and roll. Again, risk on. You're finding a lot of buying interest or maybe short covering happening in the lean hogs. And look, you know, it's a big day. You're going to have a lot of people start saying now that this is a double bottom for that hog contract. And, you know, maybe it is, right? I mean, Feb hogs at 70 seems pretty cheap to me, given the fundamentals. I mean, we've known about the China hog herd liquidation, cheap pork happening there. We're not expecting a whole lot of exports to China in the near term. That's fine. But we had some pretty decent export sales here today anyways. And I think domestic demand is going to be really, really good through the holiday season. So yeah, maybe we'd gotten a little bit too cheap there on the pork. And now you're seeing that surge higher based on, again, this risk on climate that we're in today.
Well, I plead guilty to contributing to some of the demand here lately. So anyway, thank you, Ted, for helping us analyze everything today. And I wish you all the best. Ted Seifried of Zaner Ag Hedge with us on a Thursday morning. Suzanne, boy, look at that. Pigs can't fly today on the nearby.